Hey everyone, Mike Vanderheiden here, founder of Portal Ventures. Now at Portal Ventures, what we do is we help online marketplaces like yourselves generate more lead flow and revenue through scalable and effective search engine optimization strategies. Now as part of the Property Portal Watch conferences, we're going to be opening up a limited number of spots where we can talk directly with you about your challenges, your opportunities, and potential strategies on what you can do to grow your organic search traffic. If you'd like to know more, keep an eye out for the communication throughout the conference or go to portal.ventures/PPW to secure your spot now. I look forward to talking to you soon.
I'd like to introduce our next presenter, Michael Lahyani, who I've known for many years. I think it's going back to 2001 or 2 or something, rather when I was at REA, and we actually had an investment in Michael's business in those days, and it's been fantastic to see how the Propertyfinder business has gone from strength to strength over the last 15 to 20 years. So Michael, welcome, and thank you very much for joining us today. I'm going to hand over to you because I believe you have a presentation you're going to take us through for a while, talking about the challenges of operating in multiple markets, and then we'll have a chat afterwards.
Thank you, Simon. Thank you for having me. And before I jump in my couple of slides of the presentation, I'd like to take this opportunity to thank you again for 13 years ago believing in Dubai, in the Middle East, and in what we were building. Had you not invested when you were CEO of REA into our company, I probably wouldn't be here. So again, on behalf of all my team here, I still would like to thank you today.
Thank you.
Let me move to my shared screen. Can you see my screen?
Yes.
Great. So Simon asked me to talk a little bit about the challenges of taking a business international. So we are headquartered in Dubai and we operate in 6 markets across the Middle East: Qatar, Bahrain, Egypt, Saudi, Turkey, and obviously UAE is our core market. And so today I'd like to share with you a few of the learnings that we've had and some of the things you should consider before going international, because we've learned some of the lessons the hard way, and I'd love to share those with you. So first of all, one of the questions I recommend everybody that wants to take his business international is, why are you taking it international? Have you absolutely saturated your domestic market? Are you sure that there is no more growth where you are and you absolutely need to go into a new market to generate more revenues? What we've seen over the years at REA or Rightmove or all the big real estate portals is that there's a lot more depth in their core market than they ever thought. Simon can talk about this because in 2008, he was, thankfully for us, he was the CEO of REA and went abroad to do some investment because he did believe that there was more growth in Australia in the classified space. And since then, realestate.com.au has grown 5x. Same thing with Rightmove. Many analysts have written off their growth of revenues for many, many years. And in the UK, they continue to grow and to show that there is more depth into their market. So again, ask yourself, have you really saturated your market before you go abroad? It is much easier to go deeper in your market that you understand, that you know, rather than going into a new market. So what are some of the challenges that we faced scaling into new markets? Well, first of all, we realized that no real estate market is identical. Actually, every real estate market is unique. It's a product of their history, of the supply, of the demand, of the local laws, culture, foreign direct investment. The dynamic is never the same. And so you rarely can take your exact product from one market and copy and paste it and have it work into another market. I think the only place where it worked for us was in Qatar and Bahrain, which are work very similarly to Dubai and the UAE. Otherwise, in every other market, we had to adapt, and it took us many years to adapt. Also, the subscription business model works really well in structured markets, so in the UK, in Australia, and the UAE. But when you go to more emerging markets, as many of you know, it becomes a lot more difficult, and you have to move your business model more into the transaction, and that is a whole different world. What we've learned is that scaling multiple markets at the same time is hard from a product perspective. It's also takes away the focus that you have on one market. You're exposing yourself to different FX foreign exchange risks. You're certainly maybe collecting money in USD and then in another currency, and if that market, we have that experience in Egypt when the Egyptian pound dropped, or in Turkey when the lira drops, and then that impacts the predictability of your revenue. Also, some people might not want to be exposed to one of the markets that you are. So when we were raising fund in our last round, we had an investor that loved our business, but he just didn't want to have exposure to Turkey. And Turkey was a tiny part of our business, but because it was part of our group, then they said, well, we can't do the investment. So you always need to think about the effort and the reward into going into a new market, and if that's going to prevent also any investors from coming in. Obviously, there are pros of going into international. Otherwise, we wouldn't have done it, and those are, you diversify yourself, and so if one market doesn't work, then you have another market. When you're raising money, investors love big total addressable market. It is obviously easier to do that when you have multiple markets, so you can pitch big and you can predict big revenues ahead. You can share some knowledge from one market to another, some learnings, what didn't work here, try it there. And of course, it's very exciting for the founder and the team to be able to go and conquer a new market. But be very careful not to go out there just to put a flag and just to say that you are in that market. It's going to be draining on your team, on your resources, and on the focus that you have. Next slide. There we go. So some of our learnings was that you absolutely need to be number one in your domestic market before you go abroad. REA, Seek, Idealista now, who went to Italy, they're all strong, leading number one in their market. Why? Because if you're bleeding cash into your domestic, your core market, and you start opening a new front, then obviously you're going to end up in a very difficult situation. We've seen this with Lahyani, who went in multiple markets. They weren't profitable, and had they picked fewer markets and focused on fewer markets, they could have been maybe more successful at it. You also want to ask yourself, is it going to really move the needle? Why am I going there? When I mean move the needle is, can it at least add 50% to your revenues? I think if it's not going to add plus potentially 50% to your revenues, you shouldn't even consider it. It's going to be a big distraction. Can your tech stack scale? Your CTO will tell you that it probably can. Once you start executing, you'll run into a lot of different issues, because localizing a product for multiple locations has its challenges. And then finally, scaling teams internationally is a challenge, right? You have different culture, you have different time zones, you got to travel to those locations, you have more people, and therefore communication just becomes a lot harder. So I'd like to share some of our learnings, and again, in no particular order. The traditional subscription model doesn't work everywhere. I think a lot of people have found this out and are moving into the transactions in more emerging markets. But the transaction is not as predictable, is not as profitable, and you won't get the same revenue multiples that you get and with the classified. And those multiples, those high multiples that REA and Rightmove get is really what attracted us. So, and then one lesson that I learned as well is that everything will take much longer than what you thought, right? So if you go into a market and you're like, this is going to take us 2 years, well, you can at least double it. It will be 4 to 5 years. It takes time to build a network. It takes time to build trust among the customers. It takes time to build a brand. And until you can deliver value and then monetize for it, this is going to take time. So this is why you need to be profitable in your core market, because if you go into a new market and have to finance it for full 5 years, you don't want to have to go out to investors, because then if you're fundraising, running a local market, and managing a global expansion, that can be a little bit too much. We've learned it, the hard way. We went to markets like Morocco and Lebanon. We could have seen it that it would not move the needle. We ended up exiting those markets because, did we deliver a decent value to users? Did user want a property portal in those markets? Were real estate agents happy about us being there? Absolutely. Was it a good business? Absolutely not, right? So it's not because there's a need that there's always a business case. We now pulled out of the market and we're focusing on 6 markets. Like I said earlier, Qatar and Bahrain has been successful for us, but Egypt, it took us 6 years to actually get into the millions of USD of revenues. And 6 years is a very long time losing money. It's hard on the morale, it's hard on the team. And so you got to know what you're getting into before entering a new market. Finally, one takeaway that I can share about my personal experience about taking businesses international is I would have done probably fewer markets and would have gone deeper in the ones that has the data and shows that has potential to move the needle. So that's for my learning. I'll take the presentation down and then Simon, we can have a little chat.
Yeah, I got a bunch of questions out of that. An interesting observation, right? You've recently had the Bayou Dubizzle sort of merger. How does that impact you in your core market? Because one of the things you mentioned was dominating your core market gives you the capacity to move into these other markets. Through this merger, you now have a much larger competitor in that core market. So how does that impact, A, the local dynamics, and then B, your thought around the international expansion?
So I think, the answer that everyone will tell you is competition is healthy, right? We've seen it. REA has had competition from Domain, right? That move has had competition from Zoopla. And both of those number 2 has helped grow the pie, grow the market, the advertising market, and hasn't really taken anything away from REA or Rightmove. So we have a bigger competitor by them being together, but we see it first of all as a win, right? Because the reason why 2 people or 2 companies merge is probably because individually they couldn't get to number 1. So that's kind of a little win for the team and for us. And then, it keeps us on our toes, right? I mean, it's exciting to see that that we have strong competition, and they help us, they help us grow the market. At the end of the day, they're pitching digital online advertising to our customers, right? So they are actually selling the fact that spending more online has a great ROI, and then we just have to prove that we have a better ROI than them.
Okay. And then how does that affect the way you manage your international businesses? Does it mean you've now got to take parts of the team that were focusing outward to these other markets and then refocus?
Not at all. We've never been obsessed by our competitor. I think it's really good to watch and see what your competitors do, but every company that has been obsessed by their competitors tend to fail, right? So we follow and we look what they're doing. We're careful. We look in our rear mirror, but we don't drive at 200 miles an hour looking in the rear mirror. We look through a windshield and we try to focus on what's ahead. So absolutely no, we haven't taken any resources from other markets to fight the UAE, and we continue our international growth.
So in managing this international group, how much is centralized and how much is decentralized? How much authority do you push out to the countries to make decisions?
So this is a really good question, right? Because I think that if you run multiple markets, you'll constantly have to ask yourself this question. So the answer differs depending on the stage of growth of each market, right? So when we started in those markets, you're starting from nothing, right? If you centralize, there's no way you can reach minimum scale, right? There's no way you can, because decisions will take too long and the local country manager or entrepreneur will get frustrated and will get nothing done. So you gotta, in the initial phase, you gotta leave it as much as possible to the local entrepreneur to try and build a business. As you scale, and as those businesses reach a larger size, then you try to integrate them more with the HQ. And now, a lot of it is integrated from the UAE. So So initially they used to do all their digital marketing, they used to do all their customer care, they used to do pretty much everything. All we did is give them the technology. Technology, you always want to have it centralized. If you start having different technology stacks in different markets, that becomes really, really messy. But now even digital marketing, I mean, the MarTech stack that we have is so robust here in the UAE that it couldn't be replicated by the local entrepreneur in Egypt or in Turkey. So we get massive advantage from using that technology.
Talking about the technology stack, to what extent do you allow the local markets to customize versus you're given the range of products?
So the local markets don't have engineers, right? So all our engineers are managed centrally, whether they are in the UAE or outside. But they do want to have a localization, right? So every country manager will start by saying, my country is different, right? And yes, it is different. But at the end of the day, we have a business model that we need to apply, and then we can tweak it a little bit, but we can't go and build something totally different, right? Otherwise, let's exit the market because we're not in that line of business. So I like to say that, you know, maybe 80% is common and then 20% is localized. You do want to give that local flavor, especially on the B2B side. The agents wants to know that the product is being built for their market and they're not using an international product. So one little story there is, you know, when we went to Saudi Arabia, the CRM product that we built, one of the drop-down menu that you can, when you list an apartment, is put pet friendly. And the Saudi real estate agents and looked at us and said, what do you mean by pet friendly? I said, yeah, do you allow pets in the compound? And so they told us, pets? What, animals? In the house? Are you crazy? So, so just to tell you that culturally, it was a no-go and we had to take it out because the Saudis don't have pets. And so, you know, we went on to do a conversation for hours about that. So just a little example of some of the localization we've done.
Yes, and something you probably intuitively would never have expected.
Exactly, right? Hard to see that coming.
So a question popped up here. Yeah, so who ultimately has the say of what happens? Is it head office or is it the country manager if there's conflict or difference of opinion?
It's a good question. Again, I think it depends on the size of the country. So how big is the country compared to the overall revenue? So if you represent less than 10% of the revenue, it's unlikely that as a country manager, you're going to have a lot of say. If you represent a bigger share or a bigger share of the future revenue, meaning that your growth is 3x of the one of the core market, then, you know, you'll have a little bit more of the ears of the HQ. But it is, you know that if you're going to be running a local business for a group that is HQ somewhere else, that is going to be one of your major battles. Convince HQ to give you the resources that you want. The same way that HQ has to convince its investors to give them the resources that they need, right? So I hope that answers the question.
Yeah, that makes a lot of sense. The right business cases win at the end of the day, exactly. No matter what level you're dealing in. COVID has been highly disruptive on many dimensions around the world. What are some of the challenges it's provided for you, and what are some of the opportunities it's provided?
Yeah, so I think the challenges was how quickly it hit us, right? I think when we saw it coming, a week later we were working from home. And so some of the challenges is, thank God we had moved everybody to one single platform for communication and, you know, pushed all the company to communicate through the same technology or the same platform and not through WhatsApp or personal messages. And having everybody, because if you want to work with somebody and you want to try and reach him and you're not in the office, you need one place where you can go and reach him. We've used Workplace and it works brilliantly for us. And we were lucky to have done that move before we moved from work from home. Some of the challenges we've been in lockdown. So at some point, real estate agents came to us and said, we can't do visits. If we can't do visits, we can't close deals. If we can't close deals, we can't make commission. If we can't make commissions, we can't pay your fees. So we had to sit down at the table with the real estate agents and find a way to make it through those lockdowns moment. Thankfully, the pure lockdown in the UAE only lasted for 3 weeks. None of the other countries we were operating had a full lockdown. They had curfews and different rules, but the UAE reopened, what we saw is that once it reopened, there was a massive pent-up demand. People were eager to upgrade their setup, whether it is on a rental, or buying a property. They wanted to move to apartments with balconies, houses with gardens, with pools. So there was a lot of activity. What are some of the benefits? I think we've all accepted that it's okay to work from home, right? I think as a leader and as a founder, CEO of a company, I've always wanted to have my team in the office and 100% of my team in the office. And that's because you're building a culture, and that's because you want to see people, and it's very hard to do that remotely. But we've learned to accept and to relax those rules and allow people to work from home. We still want to see them. We still want them to come to the office. We still believe in human interaction, but we are a lot more flexible with that. So it's given people a lot more flexibility. And it's also allowed us to communicate with customers through Zooms and not having to necessarily drive hours to go and meet a customer. And so we've seen great efficiencies as well in our sales activity.
Okay. So the customers are now more relaxed about, I think, it depends on the culture, but many cultures around the world, you had to have face-to-face meetings to make any progress.
Yes.
And I think this whole COVID thing has pushed everyone into another dimension, an area that they probably were historically uncomfortable with and now have to be comfortable with. And they realize, having gone through that door, that there's nothing bad on the other side.
Yes.
Are you finding it easy to close out deals via Zoom and sell online?
Yeah, so I think when it's an existing relationship, it's easy, right? You know the person, and then you can see it on Zoom. This is like you and I having a coffee right now, a conversation. It's really clear. We see each other really well. I think it's a little harder when you don't know the person and when you're trying to buy the trust of a person through Zoom, and when you don't see as much of the body language. And so new business can be a little bit harder, I would say, through Zoom. But existing business and account management works perfectly fine. Although, you do want to keep some sort of physical relationships, but you don't need to see someone on a monthly basis in order to do that.
Okay, another couple of questions. To what extent do you think about getting into the transaction and being a transactional-based business, whether it's in property sales, in mortgages, secondary type transactions, versus the traditional advertising business?
So the question is?
Well, to what extent are you into transactions versus the traditional advertising? And if you roll the clock forward 5 years, how important is transactions versus the advertising?
So look, I think you said it earlier, right? Once you have a business model that's working and that has margin, the last thing you want to do is go and disrupt that, right? And so we have that in most of our markets. And so the subscription model, working with agents and us not getting involved in the transaction, works really well. I think where we would consider going into the transaction is if we think that we can't deliver the right service to our users, or if the brokers that we are enabling to list on our platform are not delivering a service that is at the level that is expected by our user. If the user experience is terrible once they deal with a broker, of course it can always be improved, and we know that. But if they can't transact simply because the experience is bad, then that's when we would look at going into the transaction. We haven't, we're looking at different models out there, right? Because we stay educated about what's happening. But right now we are committed to working with the real estate brokers, and they are our partners, and this relationship is working really well.
And what about secondary transactions, things like mortgages, insurances, relocation services? Are they things that you are either in or moving into?
Yeah, so we're in the mortgages, right? So we bought a couple of years ago a mortgage brokerage business, which we've rebranded Propertyfinder, and then we've digitalized that process. Again, very hard to digitalize from A to Z, considering that you've got to integrate it with banks who are not the most digitally savvy entities. But we've been able to offer a lot of that service online. And again, for the same reason, not because we were after the profits of what mortgages would do, but simply because most of our users that we were interviewing and researching were complaining about the fact that they wanted to buy a house, but they just couldn't figure out what was the right mortgage product for them. And so we said, well, we need to come into that space and play a role in order to enable the transaction. Because if you can't find a mortgage, you can't buy, and then the agents can't close, can't make a commission, and won't be able to pay our subscription. So we went in it more by necessity and more to support the ecosystem rather than to chase a new revenue model.
Michael, thank you very much. It's fascinating to hear how you've moved into other markets, the lessons you've learned in doing that, and then how you're managing those markets from Dubai. So thank you very much for spending some time and chatting about the great growth of Propertyfinder. So well done.
Yeah.
And things have come a very, very long way from when I met you back in 2005, I think it was. I can't remember, a long time ago. So well done, and it's great to see the growth.
Thank you very much, Simon. It's a pleasure to see you again. It was great to also see Scott Holmes from REA, who's part of the old team. And I really enjoyed this conversation. Thank you, everyone. Bye.
Thank you.
Hey everyone, Mike Vanderheiden here, founder of Portal Ventures. Now at Portal Ventures, what we do is we help online marketplaces like yourselves generate more lead flow and revenue through scalable and effective search engine optimization strategies. Now, as part of the Property Portal Watch conferences, we're going to be opening up a limited number of spots where we can talk directly with you about your challenges, your opportunities, and potential strategies on what you can do to grow your organic search traffic. If you'd like to know more, keep an eye out for the communication throughout the conference or go to portal.ventures/ppw to secure your spot now. I look forward to talking to you soon.